Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. May is officially in the books. We had another fantastic week for the bulls, pushing to all-time highs. But I want to start this video really sort of talking about the market testing everyone's patience right now. So if you feel like you are getting worn out or you're struggling a little bit, I want to walk you through why that might be the case, because it's not just one camp of market participants. I think the market is doing a very good job right now at sort of inflicting a lot of pain and anxiety across a number of different traders and investors. And so that's where I want to start. And I think from there, we'll get to lots of the market moves that are happening right now. There was also some more unusual kind of rotation plays that we're going to talk about. And then we're going to look at a ton of our momentum trade ideas at the end of this video. So make sure you stick around. Let's start off with the SMH. So semiconductors, obviously no surprise, especially for anyone that routinely watches our videos. This is the mega concentrated leadership group in this market. It is up, let's put on our yearly chart, 66% in 2026, 5 months in. But I would say that the patience that is being tested here, even amongst some of the most hardcore kind of bulls in this space, to stick with this trade as it continues to, again, weekly chart here, move up at such an extraordinary clip. That entire return that we looked at is really just been the last 8 weeks. So it hasn't been a slow, gradual move where the trend is developing, stocks are getting re-rated slowly over time, things are building out. This is like, whoa, we are here 8 weeks just ramping through these gains. This is now a very difficult trade for even the bulls to sort of hang on to here. And I would say, you could even throw the QQQ to a lesser extent in this same situation, just tech generally. We have pushed higher so fast in such a short amount of time that now it's becoming, if you're disciplined to take profits and not have all your eggs in one basket, to just kind of stick with it, have the patience and the process to continue to follow this market up. Now, in this same sort of vein here, I want to talk about NVDA. I think this is testing the patience of so many investors in this space, because this is, really the most profit center company in this entire space. Yet, if we look at the yearly returns here, it's up 13%. Now, 13% still a good year, right? It's moving in the right direction, but NVIDIA is absolutely crushing their profitability, their growth, their trajectory, their dividend being raised, the buyback accelerating, and yet when you compare it to other industries, or other stocks in the same, semiconductor industry, it is not getting the appreciation that some of these other companies are. So I think this is a very frustrating point, and we are testing the patience of NVIDIA bulls here. Let's flip gears to something where I squarely fall into, and that is Bitcoin and crypto investors. We haven't really seen a risk on market like we are getting now without crypto participating and in fact probably leading. We usually get this to be the kind of high beta, very sexy part of the market. And that's just not happening this year for a number of reasons. We've outlined a lot of them, but it's just not as interesting right now. And there's lots of other, question marks in place here. But this, I think, is a very frustrating spot for lots of folks, because they're saying, hey, I'm a crypto investor and I am down on the year, and I am down or flat over the last multiple years. So this is a very painful spot. I want to talk about oil next. Oil had another big week down here. And I think if you talk to a lot of macro folks and oil specific folks, they will tell you that this situation, with the strait being closed for so long and with reserves being drawn down as quick as they are, this is a higher for longer, for just much worse than the market is pricing in. And of course, what real world crude oil is transacting at is very different than the financial futures contracts that are being priced right now. So we are at like $89, $88 a barrel for WTI. Meanwhile, in the real world, that number is more like 130 or somewhere in that realm. So there's a big disconnect here. Yes, oil is high, but I think it's frustrating even the folks that really pay attention to the macro, to the reserves, to where the shipping, containers are actually heading, and how we're basically now out of the last shipping, freight kind of hitting their destination, that this is a trouble spot, yet the prices are not reflecting it. So I think we can go on and on. There's a few more, but you get the point. I think this market right now is uniquely pushing the buttons and making lots of different folks frustrated. So if you are in one of these camps or multiple of these camps, you are not alone. This is what the market is really, making people kind of suffer here. It's what it's sadly good at, but that's what we're here to talk about, is maybe where some of these, inflection points might be. We're going to talk about some rotation now. Let's look at the numbers here. Because we're on oil, I do think, looking at XLE, again, a painful spot for XLE. It is coming back down to what presumably is the bottom end of a range that it's been in. I still think XLE fits nicely in a portfolio here. If you have a longer term horizon, I still own it. Obviously a down week for XLE, the worst sector, I think, this week, down 5%. Crude oil obviously down sharply. But again, I still squarely think that this is a good sort of orthogonal kind of position to have, especially if you are a tech investor or you have other risk assets in play. So techno energy, I think, is certainly interesting this week. If we scroll back to the Qs, last week we talked about the market maybe putting in a little bit of a range. You can see that didn't happen. Well, maybe it did, right? But it certainly broke out on Tuesday of this week and then started to float higher, which is again this kind of situation where even the bulls are having trouble sticking with a market that is going such, vertical in such a quick fashion. So the Qs here, when we look at it, we closed at all-time highs. We're up at 2.89% positive for the week. And this month of May is up 10.5%. That's after a 15 or 16% gain in April. All right. So we are certainly, having a lot of fun. The music's playing, I would say, for levels, for traders, 720. That's the breakout of this kind of range here from the highs in the middle of the month. So if we can stay above here, then the party continues, momentum trends, and we can continue to float. If we start to lose 720 or a bigger level 690, then you set yourself up for kind of more of that reset, so to speak. SPY, mostly the same here, basically did the same kind of thing where it moved up above its range here or above this pivot high. This move happened a little bit later in the week, but still you get very similar situation in small caps, kind of basically the same thing here, continuing to hold their momentum. If we take a look at volatility, I think we're back to lows now seen January. So you'd have to go back to January time before you've seen the VIX around 15. So once again, you're starting to get fairly cheap hedges if you want to protect any long positions right now. So volatility is quite cheap. It's down a handful of days in a row. And so that's kind of the setup as we turn over into June. So we've got a turnover of the actual calendar month, obviously, as well. Let's talk about a few other areas which I think are notable. I think gold should have a little bit of people's attention this week. So gold has been really dead money since the blow off here in February or January. If we look at the performance year to date, it's still up 5%, right? Last year was up 60%. So it's doing some much needed digestion. And I think, as messy as it looks when you drill down to this time frame, I would still argue that zooming out, this is healthy price action to sort of work off such extreme conditions that gold was in. I do think that this gap down on Wednesday, and obviously this is an ETF, you could look at the futures contract, but the GLD kind of gap down where dip buyers, kind of open, we open low, closed high, open low, closed high. Friday, okay, we didn't quite close high, but we still opened low and drove up. I think this is a little bit of a change in character here for GLD, and especially as it got back down and almost retested March. So this is still, look, we don't have enough follow through or confirmation, but I like the wick here. I like the hammer. Maybe that's an intermediate low that just got put in for GLD. If we look at something like GDX, which kind of led this week, it was up 5%. So, and it took out did it? Yeah, just about closed right at last week's highs. Notice it kind of, had a little maybe positive divergence here a little bit, and generally speaking, just acted a little more excited. If we look at something like XME, which is obviously now you're moving more to steel and just commodities in general, but this is the metals and mining ETF. Take a look at the week it performed here. So this was up 7%, took out some highs. It's in a very strong uptrend here. So I think this whole space, even silver miners, starting to get more interesting. This whole space has got a little bit of that rotation look where this could have been a week one kind of pivot. I think you obviously need more confirmation, but it's something that I want to present here as a rotation potential. If we look at other sectors, biotech now looking pretty actionable again. So again, this has been mostly sleepy sideways with a slight tilt up for most of 26, but you can see XBI is starting to get back up there. Excuse me. If you look at IBB, you can see again, very sideways here since the end of the year. It's gone nowhere. This one's not quite at a breakout point. This is more the large cap space, but certainly something you want to have on the radar. If we start, breaking highs above 180 or so, then it seems like it would be go time. We're not there yet, but it's worth flagging as a relative outperformer this week. And then let's look at solar, which also saw some acceleration this week. So this is not a week one move. This has been, kind of moving up, but take a look at the dollar volume traded. So you're getting a lot more interest here as this accelerates up. So you naturally have a lot of these individual companies. I won't go through them all here, but certainly working right now. IGV. So IGV certainly coming back from the dead, particularly on Friday. We can probably thank Snowflake for lots of this move. Not that it's a heavy weight in the IGV, but I think it's the sentiment. It's the, positive, kind of re-rating, if we want to use that overly used word right now, for lots of software stocks. And so I think Snowflake's massive move that it saw on Thursday, it was up 36%. Talk about dead money. The stock has gone nowhere really since IPO, but maybe it's finally starting to get some of its act together. IGV is now very much moving back towards at least the top end of this range. And you can look at Oracle, which is a massive weight in it. And you can look at Microsoft, which is a big weight in it. Both of those stocks seeing big Thursday, Friday moves here. Again, Snowflake and these stocks all kind of moving. So there was lots to trade this week. That was not the same, but I think, you had to kind of have your nose down and looking at these spots to really catch them quick enough. And we'll look at some stocks a little bit later, actually shortly here. I want to show you two things. I want to show you a new sector view that we're working on. This is very similar to the grid that we used to show, but now this is kind of up on the website. Still getting this drafted and polished up. But basically, this is our model for the sectors. And so we have really eight sectors that are bullish or leaning bullish, and we have 3 that are out in the bearish side of things. Technology, of course, is the big heavyweight king here at the top of the list. On the downside, you've got energy, you've got utilities, and you've got materials. All right, so those are your top 3 kind of dogs right now. But generally speaking, breadth is constructive. It is holding up, and most things are participating right now, even if there are a handful kind of in the bullish leaning phase, which aren't outright bullish. So I'll have more to say on this view. I think there's some actionable takeaways we can, look at each week from our sector momentum view. You can see the long-term charts down here as well, as we have our model sort of overlaid here. So I think this will be helpful. Hopefully next week it'll be a little more integrated into the platform, but for now I wanted to at least show that this week. And before we look at some individual stocks, I want to make a pit stop and just shout out our sponsor. So this show is sponsored by our friends over at Investors Business Daily. This is their market surge platform. I pretty much have it open using it every single day. For me, this is my, kind of research platform for more of the investment position trades, things that I'm taking and wanting to understand, how does a company stack up against other companies. I've got links in the description of this show. So grab yourself a discount to Market Surge and their IBD digital platform. All right. So I think that's pretty much everything I wanted to say on markets. We're going to look through a lot of stocks here in just a little bit. Let's get our dashboard up. So this is updated as of Friday's close. S&P up slightly, Galahad up slightly. Quant Rocket's finally taking a breather. So our momentum model has been really just nonstop to the upside. I think Friday was the first losing day in 6 or 7 days. And I want to show you all the stocks that are on the list. So today I want to walk through everything. And the reason I want to walk through everything is really because it's hard to pick out anything new and actionable right now. There's lots of these stocks that we have on our model that have just run quite a distance, right? And so I just want to show you how we're trading it, because I did get some questions coming in, and we'll just take the time today, because it is more of the same in terms of the market outlook, to share some process, share some of the names that we've been trading, and maybe you can come away with some ideas yourself. So these are all the stocks on our Quant Rockets list right now. I'm going to sort from the best return, so the highest, longest winners at the top. You can see on the right-hand side, these were the profit targets, and you can see the return. So Light, this is their biggest holding. We've had it for 147 days. Very unusual. We usually do not have stocks this long. It's up massively. Take a look at this right now. It's dancing on our exit zone. So maybe we are finally going to be getting out of this week. Not that I want it to go away, just that it's been in here forever. And so maybe it finally finds itself out the door, but that's the way we're looking at it. I'm going to move through these pretty quick. So there's only a handful I'm going to actually talk about. SOXL, this is the 3X Semiconductor ETF. Probably the best return in a short amount of time that we've seen almost ever. 200% in 35 days is really special. And obviously it's still going. All the targets have been hit. So presumably, you'd have less size right now. Flex up here, you can see exit zones at 123. MU. So yes, MU, Micron, everybody's talking about it. Look, we're still hanging out in it. This is something we had before this run, and then we reinitiated the trade back here at 420. Current exits at 700. So it still has plenty of room. What you'll notice is we do give stocks plenty of room. I think one of the things that traders do is put stops too tight and they cut things off. We try not to do that. Obviously it happens. SanDisk working for us. STX, right? Seagate. So these are all the hardware memory names. Planet Labs back on the list, 2428. I believe I talked about this multiple times in here as it was consolidating, as it was a winner and a loser. Here it goes, still kind of chugging along for us. Datadog, I remember distinctly doing this video here when software was hated. Software was starting to shape up. I shouldn't say it was so early. It was, when it was starting to firm up. Datadog now hit 4 targets, going to its 5th. It's up 100% in 29 days. STRL, Rocket Lab, very popular one. Nebius, been posting about this one. Again, many of these names I've shared multiple times over the last couple of weeks. We're just kind of walking through it. BE's been on and off the list. SMTC, Applied Optoelectronics. Yeah, so this one was a down week for us. But again, look at the exit zone. Look at where we're going to exit this trade. We're giving stocks room. So if it has to pull back 5 or 6 or 7 or 8% even, we're still hanging around in the trade. And I think that's the way you need to approach, especially some of these very, very intense kind of momentum stocks that have a lot of beta. TQQ still in it here. So that's just the NASDAQ 3X. TTMY, you can see the exit zone there. IONQ finally starting to work. Just, shared this trade multiple times back in here as well as a loser, and as it was starting to get going. LSC, MTSI, let's see, anything else that's much more actionable. Rubrik, this was the software name, again, discussed back here, starting to accelerate higher. So this one's working now. Cypher, great looking chart, shared that many times. Fix, AppLovin finally coming alive. This was a slow one in terms of the software names. Whoops. KSI, so you can see here, getting close to our next target. Exit zone starting to cheat up. Joby, like the potential here. This one was a shared as it kind of comes back in and fills this gap. So I think that one's working nicely. Let's see. A-Lab starting to do some work here as well. This was a recent entry for us. ASTS. So this is a good example. So ASTS got hammered on Friday. Let me see. So this was down, the chart. This was down, I mean, at the lows here, this was 20% down on Friday. Filled the gap and then started to reverse. So we have a position in this. Now we obviously have favorable entry in it down around $98, but look at the pullback we're willing to tolerate. And I think that is, you know, if you want to capture the 100% or the 150% winner, you do have to sit through some of these painful pullbacks, right? And again, that's a decision choice. You could obviously free to do what you want, but in terms of our model, like we give tolerance to these things. And you can see, like, even with a 20% gap down, our exit zone is still down here around $91. So we're not encroaching on the trade too much. This one's finally a little bit actionable. Souls, I've probably talked about that one before. RMBS, so these are some of the newer ones. So this one's a little more actionable as well, Duolingo. So you can see our exit zone, I've shared this one, is now above our entry. It's just been cheating up. The stock hasn't really moved, but our exit zone's moving up. FN, ABVX, okay, so this is a new entry for us this week. You can see how it's starting to lift up here. So here's something a little more actionable perhaps. Credo, CRDO, this is a new one for us as well. FTAI, new one for us as well. And SATS, Biotech, NXT, AMPX, those are new ones. NET, new one. TNA, new one. And Powell. Wow. Yeah. So there's a lot of new ones here at the end. So that's it. I don't know if that was helpful, but that's the framework we're using to really hunt down all of the individual bottoms up approach of what is working in this market, right? And so I think having a process, picking through these names, it's tough to take every single name because there's 50 stocks on this list, but maybe you're using this as a due diligence research, you know, kind of jumping off point where you're picking 5, 6, 7, 8, 9, 10, building a portfolio and trading around those names that match the technicals that you're also looking for. So that's Quant Rockets. I've got links in the description of the show. I think that's everything on the market. Patience. It is testing everyone's patience. So I think having the process, sticking with the process, being disciplined, understand that if you're frustrated because you find yourself in one of those camps we talked about at the top of the video, you're not alone. That's what the market is inflicting right now. So as long as you have the process in place, right, to withstand and to stick to your trading systems, your strategy, your rules, your workflow, and that is what matters most. I don't know why my print dialogue keeps coming up here. I apologize for that. Have a good weekend. Thanks as always for tuning in. Don't forget to check out the links for more. We'll see you back here next Friday. Take care.